morning, all of you. So, in this session, we will learn about financing decision. First of all, about what is leverage analysis, and then next, EBIT, EBS analysis. EBIT, EBS analysis. Right? So, in the previous class or in the previous lecture, I mentioned about what is leverage, what are different types of leverage. So, we will learn again about leverage analysis in a short period, and then broader discussions we will do on EBIT, EBS analysis. Right? So, the concept of leverage analysis is related with the financing decisions of a firm. So, the financing decisions, one of the main important decisions of corporate finance or financial management, along with the investment decisions and the dividend decisions. So, there are, there are three decisions made by a firm in the corporate finance. One is investment decision, or investment decisions related with the purchase of fixed assets in a firm. So, long-term projects which results into increase the income of a business firms, or which are helpful to reduce the cost of a business firms, and ultimately there is a benefit of increasing value or wealth to the shareholders, is the outcome of the investment decisions as well as financing and dividend decisions. So what it means, every decision impact is examined on risk and returns available to the equity shareholders, and finally whether through that decisions there is an increase or decrease in the share price of a firm, and finally whether value of the shareholder has increased or decreased. Right? So three major decisions: and investment decisions, financing decisions, and dividend decisions. Investment decisions on a long-term basis is known as capital busting decisions. Investment decisions on a short-term basis or a short period, we call it working capital decisions. And in the working capital decisions, the decisions with respect to the cash management, inventory management, and receivables management are undertaken by a business firm. Right? So, financial decisions has two important components. One is to decide about how much total funds are needed. So, how much total capital needed by your firm? So, suppose the capital is rupees 10 lakh. So, this is the first important decision to be made by your firms in the financing, to decide about how much total capital needed by your firm. For example, हमने consider किया कि 10 लाख रुपए एक फर्म को चाहिए. Second decision is about sources of the funds. There are two types of sources, long-term and short-term sources. But exclusively we will consider in the capital structures of a firm only long-term sources of finance. So suppose there are two sources, one is the equity and second is the debt funds. So this is the loan capital, debt funds, and equity is the shareholder funds. So equity capital represents owner's claim on the assets of a firm. Debt capital represents the creditor's claims over the assets of a firm. Right? So after taking decisions with respect to these two components under financing decisions, we next move on the designing of the appropriate capital structures of a firm. So in the capital structure of a firm, only two sources of funds are considered. What it means, equity and debt. So it is a mix of only two sources of capital. One is equity and one is debt. So this is the capital structure of a firm. This is known as financial plan adopted by a firm. Right? Next is both capital busting decisions, means capital expenditure decisions, fixed asset investment decisions, and financing decisions are taken together at the same time. देखिए, in the first component, a firm has decided about total funds are needed. Second, what are the various sources of funds? So both components are relating to the financing decision. So if 10 lakh needed by a firm for which purpose? 10 लाख रुपए का फर्म क्या करेगी? 10 lakh will be invested by the firms in the purchase of the fixed assets. What it means? A company will invest funds in a project. Right? So both are taken together, and the assets of a company means capital budgeting decision, purchase of the assets by a company. This is the asset purchasing decisions or the capital budgeting decision can be financed either by increasing the owner's claim or the creditor's claim. If assets of a company are financed purely by getting capital from the equity shareholders, so we call it the assets are financed by the capital which is given by the equity shareholders. Or if it is purely financed by the creditor's claim, means amount taken by a firm on a long-term basis, or so we call it the creditor claims over the assets of the firms, or you can say it is a financing decision, right? So in the financing decision in this slide, final takeaway is that financing decision has two components, first and second. Second is investment decisions on long-term basis, and financing decisions are taken together by a business firm at the same time, right? तो इसका मतलब है कि जब कोई फर्म परचेज ऑफ फिक्स्ड एसेट्स का डिसीजन लेती है, तो टू परचेज द फिक्स्ड एसेट्स कितना पैसा इक्विटी से लेना है और कितना पैसा आपको क्रेडिटर से लेना है, या एक्सक्लूसिवली पूरा का पूरा पैसा जो है एक फर्म इक्विटी शेयर होल्डर से ले सकती है, और पूरा का पूरा पैसा जो है एक फर्म जो है वो लोन के थ्रू जो है वो मैनेज कर सकती है, राइट? अगर लोन के थ्रू मैनेज किया गया है तो फाइनेंसिंग डिसीजंस, राइट? Next is financing decision, some relevant questions to be answered. जब आप फाइनेंशियल डिसीजंस लेते हैं तो कुछ रेलिवेंट जो क्वेश्चंस है जिनका आंसर आपको एक फर्म को जो है वो ढूंढना है, या एक फर्म जो है विल गिव आंसर्स विद रिस्पेक्ट टू दीस क्वेश्चंस. पहला देखिए, हाउ शुड द इन्वेस्टमेंट प्रोजेक्ट बी फाइनेंस्ड. जो इन्वेस्टमेंट प्रोजेक्ट है, इन्वेस्टमेंट प्रोजेक्ट इज कंसीडर्ड एज ए सेपरेट फ्रॉम theoretically in the capital budgeting decisions. So there are two projects, project A and project B. So in one sense, theoretically, project A is equivalent to carrying out a firm, and project B is equivalent to the carry out the another firm, right? So how should investment project be financed? Basically, the purpose is the financing of fixed assets की firm कैसे करेगी. Second question, does the way in which investment projects are financed matter? What it means? This is relating to the capital structure decisions of the firm. If 50% money is taken by a firm from equity and 50% funds taken by a firm from the debt, so it is a mix of equity and debt on equal basis, right? So this is a one type of financing plan, one type of capital structure. Second type of capital structures may be, it may be 30% equity, 70% debt funds. It may be like that, 80% equity and 20% debt funds. So there are three ways in which investment projects finance better, right? So what it means, at this financing plan, what will be the value of EPS? At this financial plan or capital structure, what will be the value of EPS, earning per share? And say in the same way, when 80% equity is used, 20% debt funds are used. So what will be the impact of this financing plan or capital structure on the EPS of the firms, or you can say what will be the impact on the value of the firm? value of the firm. How does financing affect the shareholder risk, return and value? Being equity shareholders in a business firm, equity shareholders are assuming risk. Along with, they are expecting a certain returns from the firms, and whether their value will increase or decrease due to the adopting a particular capital structure or the financing plan. Does there exist an optimum financing mix? So now the question arises, what is optimum financing mix? Optimum financing mix means when overall cost of capital of a firm is minimum and value of the firm is maximum. Right? So we call it optimum financing mix. Can the optimum financing mix be determined in practice for a company? यहाँ पर इस क्वेश्चन का डिसीजन हमें या जो आंसर करना है, what it means, it is optimum financing mix is only a theoretical assumption कि ये सिर्फ थ्योरी में ही हम इसको समझ सकते हैं, या क्या प्रैक्टिकली एक फर्म्स ऑप्टिमम फाइनेंसिंग मिक्स को गेट कर सकती है या नहीं कर सकती, राइट? तो प्रैक्टिस में एक कंपनी कैन गेट ऑप्टिमम फाइनेंसिंग मिक्स, राइट? व्हाट फैक्टर्स इन प्रैक्टिस should a company consider in designing its financing policy? So in this factor, the factors, there are some controllable factors which are firm specific, and there are some external factors which are relating to the external business environment. So a company will keep in mind both company specific factors as well as industry specific factors as well as economic specific factors. तो तीन तरह के factors मैंने आपको बताए हैं, firm specific, राइट, जो कि टोटली कंट्रोलेबल है, राइट. सेकंड है आपका इंडस्ट्री स्पेसिफिक फैक्टर. इफ सपोज फर्म इज ए टाटा मोटर, तो टाटा मोटर बिलोंग्स टू द ऑटोमोबाइल इंडस्ट्री, तो व्हाट आर द वेरियस इंडस्ट्री स्पेसिफिक फैक्टर्स व्हिच ए कंपनी विल कंसीडर. एंड थर्ड वन आर द इकोनॉमिक वाइड फैक्टर्स, मींस द इकोनॉमी और कंट्री बेस्ड economic conditions which a company will keep in mind while deciding the financing policy, right? So these are the 6 questions, and answer to these questions are obtained with the help of making efficient financing policy or taking the efficient financing decisions by a firm, right? Now next is both leverage analysis and capital structure theories. Give answer to these questions. Give answer to these questions. So, leverage analysis, EBIT, EPS analysis, and capital structure theory. So, at the undergraduate level, we consider, we study 4 capital structure theory. One is net income approach, net operating income approach, Modigliani and Miller approach, MM approach, and traditional approach of capital structure. So in total there are 4 theories at UG level we study, and we will get answer to these questions with respect to the financing decision through getting or understanding of the capital structure. Next slide is the financial structure. So it refers to the equity and all liabilities. Liabilities are short term as well as long term of the firm. What it means, this is the equity shareholder funds and all the debt funds taken by a firm on short term basis or long term basis are part of the financial structure of a firm. Second is, it is represented by various means of financing, means owners claims as well as creditors claims. So a sum of owners claims and creditor claims refers to the financial structure of a business firm. Third answer of financial structure is, it is represented by the left hand side of the balance sheet. Left hand side of the balance sheet is equity and liabilities. The total of left hand side of the balance sheet is the financial structure of a firm. Means the financial structure is equal to equity share funds, preference share capital, reserves and surplus, long term debt, as well as, please focus on this, the current liabilities, short-term borrowings made by you, right? And it is the sum of capital structure and current liabilities. Last, it is a total of the capital structure. The capital structure of a firm includes only long-term sources of funds. It does not include short-term sources of finance, means current liabilities. If loan on a short-term basis taken by a firm, means short-term loans are not part of the capital structure of a firm. So this is the meaning of financial structure. Yes, next is capital structure and optimum capital structure. Capital structure is the debt equity mix of a firm. So earlier I mentioned 50-50, 50% equity, 50% debt is one capital structure. 80% equity, 20% debt funds are second capital structure. 70% equity and 30% debt funds is an example of a capital structure. And what is the impact of this debt equity mix on the value of the firm? Whether value of the firm is increasing or decreasing by using a specific type of capital structure. So we will verify this with the help of various formulas, and you can say that the impact of a particular capital structure is determined on the value of the firm. Second definition of capital structure is, it is the mix of long-term sources of funds only. So current liabilities are not part of capital structure, right? Third one, it is the proportion of debt, preference, and equity shares of a firm's balance sheet. So this is the left-hand side of the balance sheet. In the left-hand side, what is the total value of debt, which is taken by a firm on long-term basis. So long-term debt of a firm, suppose it is 30%. Preference capital, it may be 10%. For example, so total is 40% and 60% is the equity. So this is the meaning of capital structure. Now comes to the optimum capital structure. जैसे हमने ऑप्टिमम फाइनेंसिंग डिसीजंस, ऑप्टिमम फाइनेंसिंग मिक्स की बात की, तो इन दी ऑप्टिमम कैपिटल स्ट्रक्चर वी विल कंप्यूट द वेटेड एवरेज कॉस्ट ऑफ कैपिटल ऑफ वेरियस सोर्सेज ऑफ फाइनेंस. Suppose there are three sources of finance. What is the WACC, weighted average cost of capital of debt, preference and equity share capital of a business firm. So this weighted average cost of capital should be minimum, should be least, and share price of a firm should be maximum or should be highest. So
EPS highest should
yes, the overall cost of capital of a firm should be minimum, and value of the firm, or you can say the market price of the shares of a firm, should be maximum. So optimum capital structure is that level of equity, debt and preference capital at which overall cost of capital of a firm is minimum and value of the firm is maximum, right? So this is the capital structure at which weighted average cost of capital is minimum and thereby there is a maximum value of the firms, and this value is reflected through increase in the share price of equity shares of a firm over a period of time. And what is capital structure planning? Under this, the process that leads to the final choice of the capital structure. Suppose this is the final choice made by a firms with respect to the capital structure. इसका मतलब क्या है कि 30% हम डेट फंड्स यूज करेंगे, 10% आप प्रेफरेंस शेयर कैपिटल यूज करेंगे एंड 60% इक्विटी फंड्स यूज किया जाएगा. अगर हम 30, 10 रेशो 60 इस proportions को हम अपना एक फाइनल चॉइस कंसीडर करते हैं with respect to the capital structure. So what it means, the decision has made by the firms with respect to the final capital structure, and the ratio of various funds will be 30, 10 and 60. So what it means, a firm has made planning with respect to the decisions of capital structure, right? So this is capital structure and optimum capital structure. Next is, this is the capital structure decision process. So in this diagram, see what is this? Capital budgeting decision. We call it investment decision. Decision with respect to the purchase of fixed assets. But capital budgeting decisions are of four types. Replacement of old machinery with a new machinery. क्योंकि न्यू मशीनरी में एडवांस टेक्नोलॉजी हम यूज कर रहे हैं, या एक फर्म इज फाइंडिंग सम कॉस्ट सेविंग बाय गेटिंग ए न्यू मशीन. तो चार तरह के आपके कैपिटल बजटिंग डिसीजंस हो सकते हैं: रिप्लेसमेंट, मॉडर्नाइजेशन, एक्सपेंशन और डाइवर्सिफिकेशन. So there are the four types of capital budgeting decision. If suppose replacement decision is made by a firm, so what is the total amount required by a firm? इस replacement decisions को लेने के लिए suppose आपको चाहिए 10 लाख, कि एक old मशीनरी को new मशीनरी के साथ replace करेंगे, right? अब ये आपने डिसाइड कर दिया कि टोटल कितना पैसा चाहिए, 10 लाख. इंटरनल फंड्स आपके पास कितने हैं, मतलब रिजर्व्स में आपके पास कितना पैसा है? रिजर्व्स एंड सरप्लस. द कंपनी इज कीपिंग फंड्स इन द रिजर्व्स एंड सरप्लस. तो इंटरनल फंड्स आपके पास कितने हैं? सपोज 30% आपके पास इंटरनल फंड्स अवेलेबल है, तो रिमेनिंग 70% आपको एक्सटर्नल फंड्स चाहिए. 70 में से आपने 10% लोन ले लिया एंड 60% जो है आपने नए शेयर इशू किए या एग्जिस्टिंग शेयर होल्डर से आपने पैसा रेज कर लिया. तो 60% इक्विटी से पैसा लिया और 10% लोन लिया और 30% आपने रिजर्व्स एंड सरप्लस में से पैसा निकाला, राइट? रिजर्व. सो इन टोटल जो इक्विटी जो क्लेम है वो 90% है और क्रेडिटर्स क्लेम कितना है? 10%, राइट? नाउ दिस इज ए कैपिटल स्ट्रक्चर डिसीजन. इन the making of capital structure decision, पहले आपको ये इवैल्यूएट करना पड़ेगा कि आपका एट प्रेजेंट कैपिटल स्ट्रक्चर क्या है. सपोज मेरा एट प्रेजेंट कैपिटल स्ट्रक्चर है 50% इक्विटी, 50% डेट, राइट? If a firm is taking decision according to this existing capital structure, मतलब जो 10 लाख रुपए आपको चाहिए वो इस रेशियो में एक कंपनी नहीं लेती, बल्कि इस रेशियो में कंपनी जा रही है. मतलब 5 लाख रुपए इक्विटी से और 5 लाख रुपए का लोन, राइट? बट कंपनी इज फाइंडिंग दैट अगर हम इस एग्जिस्टिंग कैपिटल स्ट्रक्चर के हिसाब से पैसा रेज करते हैं तो हमें बेनिफिट नहीं होगा, इस फर्म की वैल्यू के ऊपर उसका पॉजिटिव इफेक्ट नहीं आएगा. तो कंपनी कैन चेंज इट्स एग्जिस्टिंग कैपिटल स्ट्रक्चर, और इसलिए डिजायर्ड डेट इक्विटी मिक्स कंपनी ने क्या नोट किया? 70% इक्विटी एंड 30% डेट फंड्स. तो यहां से चेंज हो गया, 20% ज्यादा आपने इक्विटी बढ़ाया. पहले इक्विटी कितना था? 50, अब डिजायर्ड में 70% हो गया, राइट? अब इस डिजायर्ड डेट इक्विटी मिक्स के ऊपर किसका इंपैक्ट आता है? पे आउट पॉलिसी. दिस पे आउट पॉलिसी इज डिविडेंड पॉलिसी. हाँ जी,
कैपिटल स्ट्रक्चर का डेट अब स्टार्टिंग में लिमिट ऊपर को बन रहा है 90 का इंटरनल फंड को रिटेन अर्निंग्स एक्सटर्नल शेयर को
यस. हां, सो 60 और 30, हां, ये 90 और 10, यस. 90 or 10, right? So this is the dividend policy. The residual income which is distributed to the shareholders as dividend. अगर आप डिविडेंड पेमेंट का डिसीजन लेते हैं तो आपके रिजर्व्स में पैसा आपके पास कम बचेगा, तो इसलिए जो फाइनेंशियल डिसीजंस के ऊपर एग्जिस्टिंग कैपिटल स्ट्रक्चर और डिविडेंड डिसीजंस भी इंपैक्ट आता है, राइट? तो 90 और 10 में आपने ये डिजायर्ड इक्विटी मिक्स आपने क्रिएट किया, एंड दिस कैपिटल स्ट्रक्चर हैज टू डायमेंशंस. What is the expected return to the shareholders and what is the risk faced by the equity shareholders? So every decisions के दो, every decision whether investment decision, financing decision and dividend decisions, we will consider the impact of each decisions on risk and returns available to the equity shareholders, and this return and risk will affect the cost of capital of the firm. What it means? 90% equity, 10% debt. What will be the WACC, weighted average cost of capital? And what is the weighted average cost of capital when debt equity mix is 50-50? So WACC, weighted average cost of capital, या overall cost of capital will differ, right? And the impact of this cost of capital is analyzed by finding out an optimum capital structure. Optimum capital structure अभी हमने पढ़ा था. That level of capital structure which results into minimum overall cost of capital and maximum value of the firm. Okay, so this is the value of the firm. In this capital structure decision process, we started with investment decision, then financing decision, and also consider dividend decisions of a firm, and finally the decision impact is analyzed on the value of the firm. Is it clear? Next. Now, what is the leverage? The basic definition of the leverage is the employment, or you can say the use of an asset or source of funds for which firm has to pay fixed cost or fixed return. Fixed cost or fixed return. Suppose fixed cost is the fixed operating cost. Fixed operating cost. Suppose there is a sales minus variable cost. The results will be, suppose sale is 10,000. Variable cost is 4,000. Result क्या रहेगा? Contribution is 6,000 minus fixed cost. Suppose fixed cost is 1,000, and this is the EBIT. EBIT will be 5,000. So, in the total cost, variable cost and the fixed cost, which is 5,000. We have used fixed operating cost of 1,000. Fixed operating cost of 1,000, right? So in EBIT, which is 5,000, and minus, if we subtract the interest, suppose interest amount is 500. 500. So this is EBT, earning before tax will be 45. So this interest is the fixed financing cost to the firm, and this is a fixed return to the debt to the loan providers to the firm. कि ये फर्म ने जो 500 रुपए ब्याज पे किया है तो फर्म के लिए बोरोइंग है, लेकिन फर्म ने ये पैसा जो है किसको पे किया है? जिन्होंने लोन दिया है. सो दिस इज ए फिक्स्ड रिटर्न टू द लोन प्रोवाइडर्स या लोन गिवर्स. तो मींस इट इज ए फिक्स्ड रिटर्न टू द लेंडर्स, राइट? तो फ्रॉम द पॉइंट ऑफ व्यू ऑफ ए फर्म, व्हाट इज द मीनिंग ऑफ लिवरेज? लिवरेज इज द एम्प्लॉयमेंट या यूज ऑफ एन एसेट और ए सोर्स ऑफ फंड्स for which firm has to pay a fixed cost or fixed return. firm will bear a fixed cost, which may be a fixed operating cost or which may be a fixed financing cost in the form of interest. So we can say that firm has used leverage in its capital structure, right? Second point related with the leverage is it affects both return and risk to the shareholders. अभी प्रीवियस स्लाइड में हमने कैपिटल स्ट्रक्चर के डिसीजंस का इफेक्ट किस पे चेक किया, वैल्यू ऑफ द फर्म, ठीक है? तो इसलिए leverage is affecting total return and available to the shareholders and total risk to the shareholders. So जो shareholders है वो कौन होते हैं? equity shareholders. They are the owner of the firm. उनके लिए रिटर्न्स क्या है? नेट इनकम आफ्टर टैक्स. उसको आप नंबर ऑफ आउटस्टैंडिंग इक्विटी शेयर से अगर आप डिवाइड कर देते हैं तो रिजल्ट क्या आएगा? ईपीएस, अर्निंग पर शेयर, राइट? तो शेयर होल्डर्स वांट्स मैक्सिमम रिटर्न्स फ्रॉम द फर्म, राइट? इसलिए व्हाट रिटर्न इज अवेलेबल टू द शेयर होल्डर्स? अगर शेयर होल्डर्स 10% रिटर्न एक्सपेक्ट करते हैं तो इस 10% रिटर्न्स के बदले में उनको कितना रिस्क आपको इक्विटी शेयर होल्डर्स को उठाना पड़ेगा, राइट? तो इसलिए रिस्क एंड रिटर्न एनालिसिस इज आल्सो एन इंपॉर्टेंट कंसेप्ट इन द लीवरेज एनालिसिस, राइट? तो दिस इज द मीनिंग ऑफ लीवरेज. नेक्स्ट इज फेवरेबल एंड अनफेवरेबल लीवरेज. क्या होता है? इफ अर्निंग लेस वेरिएबल कॉस्ट, दिस इज द EBIT. EBIT इज द अर्निंग. इसमें से हमने किस क्या क्या माइनस किया है? वेरिएबल कॉस्ट एंड फिक्स्ड कॉस्ट. सो इफ अर्निंग लेस वेरिएबल कॉस्ट एक्सीड द फिक्स्ड कॉस्ट और अर्निंग बिफोर इंटरेस्ट एंड टैक्स EBIT exceed the fixed return required, fixed return requirements, leverage is called favorable, and when they do not, the result is unfavorable leverage. What it means? यदि आपके पास आपने जो एक फर्म ने लोन लिया और लोन का जो कॉस्ट है वो 10% डेट फंड्स है, 10% डेट फंड्स, 1 लाख रुपए का सपोज लोन है, तो आपको कितना 10,000 रुपए आपके पास इनकम होनी चाहिए. जो आपका EBIT है, EBIT इतना होना चाहिए कि वो 10% जो है फिक्स्ड फाइनेंसिंग कॉस्ट को पूरा कर दे. लेकिन वो तो सिर्फ फाइनेंशियल लीवरेज हुआ. ऑपरेटिंग लीवरेज में आपके पास फिक्स्ड कॉस्ट भी है. तो इसका मतलब क्या है कि 10,000 रुपए लोन का कॉस्ट ब्याज के रूप में और वेरिएबल कॉस्ट और फिक्स्ड कॉस्ट 5,000 है. तो इसका मतलब आपका जो EBIT जो लेवल है वो 15,000 से ज्यादा होना चाहिए. अगर 15,000 से ज्यादा आपका EBIT लेवल है तो ए फर्म विल गेट फेवरेबल फाइनेंशियल फेवरेबल जो है लीवरेज, और अगर वो 15 से कम है सो इट विल बी केस ऑफ अनफेवरेबल. इज इट क्लियर? नाउ ऑपरेटिंग लीवरेज, it arises due to the fixed operating expenses, means fixed cost in the firm. पहला point. Second, it is related with investment activities of the business firm. Investment activities which are decided in the capital budgeting decisions. Capital budgeting decision, replacement, modernization, diversification. Okay, so these are the main activities which are undertaken by a firm in the capital budgeting decisions, right? So second point. Third is the firm's ability to use, ध्यान दीजिए इसके ऊपर, the firm's ability to use fixed operating cost to magnify the effect of changes in sales on its earning before interest and tax. So what it means, in the calculation of degree of operating leverage, the formula is percentage change in EBIT divided by percentage change in sales. Percentage change in sales, right? So yeah, you can say the contribution divided by EBIT. Contribution divided by EBIT is the alternate formula to calculate operating leverage, right? तो जब कोई फर्म फिक्स्ड कॉस्ट को यूज करती है अपने फाइनेंशियल स्ट्रक्चर में और उस फिक्स्ड कॉस्ट की वजह से उसका जो इम्पैक्ट है वो सेल्स के ऊपर, सेल्स रेवेन्यू इंक्रीज होता है या सेल्स रेवेन्यू डिक्रीज हो सकता है. Due to the increase or decrease in the sales revenue of a firm, there is a corresponding more increase or decrease in the EBIT of a firm. So this behavior is understood with the help of operating leverage, right? So it is determined by the relationship between firm's sales revenue and its EBIT. And EBIT, another name of EBIT is operating profits of a firm. So if degree of operating leverage is 1, what it means? DOL formula क्या होता है इसका? percentage change in EBIT और percentage in sales. And alternate formula, this is EBIT. Contribution divided by EBIT. If this result is 1, ये कहे कि there is no operating leverage. There is no operating leverage. Favorable leverage चाहिए जब आपका denominator is less than the numerator या numerator is more than the denominator, right? So we call it value will be greater than 1. ये formula है. Value should be greater than 1, right? So high operating leverage is good जब आपके sales revenue are increasing and it is bad when sales revenue are decreasing. And operating risk, which is related with the operating leverage, it is the risk of firm not being able to cover its fixed operating cost. If fixed operating cost is 4,000, so a firm is not able to cover the cost of rupees 4,000 from the sales revenue, right? So what it means, the firm is facing the operating risk. Firm is facing the operating risk, right? So जैसे आपने किया कि sales it is 10,000, variable cost it is 4,000, contribution is 6,000, and fixed cost is first 7,000. So a firm is not able to cover its fixed operating cost of 7,000 because जो आपका sales जो level है that is less than the fixed operating cost of a firm, right? And if suppose it is equal to, if it is not 7,000, fixed operating cost is 6,000, तो EBIT कितना आएगा? 0. EBIT is 0. So what is the degree of operating leverage? Contribution is 6,000 and EBIT is 0. This is the undefined. This is undefined operating leverage. So in this slide, these are the various points which are related with the operating leverage. And आपको ध्यान रखना है कि operating leverage का जो कनेक्शन है वो आपका operating risk के साथ होता है. Next is financial leverage. It is arises या it is caused due to the fixed financial cost. So the word operating replaced with financial. In the financial leverage, the word operating is replaced with financial cost, and this financial cost is in the form of interest in the business firm. Second point, it is related with financing activities of the firm. And financing activities are those activities which are related with the procurement of capital from various sources of finance, whether equity, preference, reserves and surplus, or the debt capital of a business model. The ability of a firm to use fixed financial charges. एक फर्म जो है लोन कैपिटल यूज करेगी और लोन के ऊपर ब्याज पे का पेमेंट करेगी, तो the firm is able to use debt funds in its capital structure, and through this exercise or through this behavior, a company will magnify the effect of changes in EBIT on the earning per share. EBIT में का जो इंक्रीज और डिक्रीज जो होगा EBIT में, उसका जो इम्पैक्ट है वो कंपनी EPS के ऊपर फाइंड आउट करेगी, राइट? तो देयर इज एक रिलेशनशिप बिटवीन EBIT एंड EPS in the financial leverage. So it is also called trading on equity. Trading on equity. Trading on equity is one sense is the financial leverage, right? And in this trading on equity में आगे मैंने क्या लिखा है कि return on investment is more than cost of the debt. Cost of the debt. What it means? The cost of debt is 10% after tax. 10% after tax. So and ROI is more than 10% cost of debt after tax. So what it means? The company has increased the EPS available to the equity shareholders. The company has increased the value given to the equity shareholders. What it means? The extra benefits are given by the firm to the equity shareholders because of using the cheapest source of capital, which is the debt funds. क्योंकि 10% आफ्टर टैक्स कॉस्ट ऑफ डेट को यूज करने के बाद एक फर्म का जो नेट रिटर्न है वो उससे ज्यादा है, 11%, 12%, 30%, 13%, तो 10 से ज्यादा 11%, तो 1% एक्स्ट्रा रिटर्न्स मिल रहा है किसको? इक्विटी शेयरहोल्डर्स को, ओके, ऑन यूजिंग 10% कॉस्ट ऑफ डेट फंड्स इन द बिजनेस, राइट? तो इसलिए जो ट्रेडिंग ऑन इक्विटी होता है, व्हाट इट मींस कि इक्विटी शेयरहोल्डर्स आर गेटिंग मोर बेनिफिट्स फ्रॉम द फर्म्स and firm is using the financial leverage in its capital structure, which is considered as the cheapest source of funds by a firm. समझ में आ रहा है नहीं? So financial leverage is known as trading on equity, and this is the definition of trading on equity: the use of the borrowed funds. Cost of debt यूज कर लिया in expectation of higher returns. जैसे हमने किया कि ये 10% आफ्टर टैक्स है और आपका जो रिटर्न है वो 11% है, तो इसका मतलब 1% जो एडिशनल बेनिफिट्स मिल रहा है इक्विटी शेयर होल्डर्स को, वो क्यों मिल रहा है? क्योंकि फर्म्स जो कैपिटल यूज कर रही है वो कैपिटल कंपनी ने डेट फंड से रेज किया, जिसका जो कॉस्ट है वो 10% आफ्टर टैक्स है. And if degree of financial leverage is 1, so there is no financial leverage. There is no financial leverage, right? And DFL is also calculated by percentage change in EPS divided by percentage change in EBIT. One formula you always. Second is EBIT upon EBT. EBIT upon EBT, right? ये पढ़ा था alternate formula, right? So in the study of financial leverage, what is the central point, central concept? EBIT. क्योंकि EBIT is also used in the operating leverage, contribution upon EBIT, And financial leverage में EBIT upon EBT, right? So EBIT is the central concept in the study of leverage analysis, right? So DFL is one, so there is no financial leverage. तो always क्या होता है कि DFL should be greater than 1. But if a high financial leverage in a business firm results into a high financial risk faced by the equity shareholders of a firm, right? So financial risk, financial leverage is connected with the financial risk. It refers to the risk of the firm not being able to cover fixed financial cost. If debt funds is 1 lakh, 10% after tax cost of debt, तो 10,000 आपका ब्याज हो गया, जिसको आप बोलेंगे फिक्स्ड फाइनेंशियल कॉस्ट, राइट? अगर एक फर्म इस इंटरेस्ट को भी अपनी इनकम से पूरा नहीं कर पा रही, means the level of EBIT is less than the amount of interest. A company has faced financial risk. Is it clear? So see, this is the degree of operating leverage. So this is the formula: percentage change in EBIT, percentage change in sales, or this always should be greater than 1. Okay? So this percentage change in EBIT is identified by this, and this is this, right? And we can also calculate DOL by using this, right? So this is the calculation of degree of operating leverage. This is the basic. We can convert this equation into this, and this equation is also used for calculating degree of operating leverage. This is the units of output, sales minus variable cost. S stands for unit selling price, P stands for variable cost, unit variable cost, and F is the total fixed cost, right? तो यहाँ पर आपको इससे आपको क्या मिलेगा? यहाँ से आपको कॉन्ट्रीब्यूशन मिलेगा, और नीचे आपको क्या मिल जाएगा? और this should be greater than 1. So this is the formula. Next, calculation of DFL: percentage change in EPS divided by percentage change in EBIT, and alternatively we can convert this equation into this. And in the calculation of EPS, see EPS कैसे calculate होता है? This is the operating profit, earning before interest and tax. First of all, you will minus the interest amount, and interest is tax deductible. There is a tax advantage to the firms because of using cheapest source of fund in its capital structure. So this is 1 minus tax rate minus dividend on preference share capital. Dividend on preference share capital. If on dividend, a company will pay corporate dividend tax. If corporate dividend tax rate is given, so you will divide dividend on preference shares with corporate dividend tax rates, right? Subsequent slides में आपको बताऊंगा कि कैसे कैसे आपको corporate dividend tax given है तो आपको क्या करना है. This N stands for number of outstanding equity shares, right? So EBIT यहाँ से calculate हो गया. This is sales minus variable cost.
सर EBIT तो minus F तक calculate होगा.
This is the contribution minus F. This is the contribution. This is minus F कर दिया fixed cost. ये क्या हो गया आपका EBIT minus interest, 1 minus tax rate minus dividend on preference shares and number of outstanding shares. So this is the calculation of DFL, degree of financial leverage, and another formula is EBIT divided by EBIT. Is it clear? Next, the calculation of combined leverage. Operating leverage into financial leverage. Or this is the operating leverage and this is the financial leverage. So final is contribution divided by earning before tax. Yeah, this percentage change in EPS divided by percentage change in sales. If there is a 1% change in sales, what corresponding change comes in the EPS? So we started from the sales variable cost. This is the contribution minus fixed cost. This is the operating profit EBIT minus interest. This is the PBT minus tax. This is the earning after tax minus preference dividend. This is the earning available for equity shareholders. Earning available for equity shareholders. So this earning available for equity shareholders divided by number of equity shares. So we will get the EPS. When there is a certain, when a given percentage change in sales, what change comes in the EPS? If the relationship between EPS and sales revenue is established, we call it a combined leverage. So this is the interpretations of the operating leverage. So there are 5 or 6 points. One point is this operating leverage is a given percentage change in EBIT as a result of given percentage change in sales. और ये कम से कम जो है इक्वल होना चाहिए. More than जो EBIT में जो change होगा वो should be more than change in sales. अगर proportionate और equal change है तो degree of operating leverage आएगा 1. When there is a degree of operating leverage is 1, what it means? There is no fixed operating cost in the business product. Right? पिछली slide में पढ़ा था. If the degree of operating leverage is 1, what it means? If 10% increase in sales results into 10% increase in EBIT, बराबर चेंज हो गया ना? न्यूमरेटर और डिनोमिनेटर दोनों बराबर हो गए. 10% increase in sale results into 10% increase in EBIT. तो रिजल्ट क्या आएगा? 1. So there is no operating leverage. And when there is a no operating leverage, what it means? There is no fixed operating cost exists in the firm. Operating leverage exists in the firm only when there is a presence of fixed operating cost in the firm. Right? Operating leverage arises as a result of fixed operating cost in the cost structure of a firm. Right? If there is no fixed cost, there is no fixed operating cost in the total cost structure of a firm, operating leverage will be equal to 1. And percentage change in EBIT will be same as percentage change in sales. अभी फार्मूले में हमने क्या देखा था कि जो अभी आपका ऑपरेटिंग जो लीवरेज है, दिस इज द कंट्रीब्यूशन डिवाइड बाय EBIT और ये ग्रेटर देन 1 होना चाहिए. ये पता था. अगर कंट्रीब्यूशन और EBIT का अमाउंट इक्वल है तो रिजल्ट आएगा 1. अगर रिजल्ट आपका 1 है तो इसका मतलब फर्म के पास कोई भी फिक्स्ड ऑपरेटिंग कॉस्ट नहीं है, which is not possible. क्योंकि कुछ ना कुछ फिक्स्ड कॉस्ट एक फर्म को उठानी पड़ती है. राइट? तो जब कुछ फिक्स्ड कॉस्ट का कुछ अमाउंट अवेलेबल होगा तो नेचुरली रिजल्ट जो है या तो वो एक से ज्यादा आएगा या एक से कम होगा। अगर एक से ज्यादा है तो फेवरेबल फाइनेंशियल लिवरेज है, अगर एक से कम है तो नेगेटिव ऑपरेटिंग लिवरेज है, मींस अनफेवरेबल ऑपरेटिंग लिवरेज। इज इट क्लियर? तो हायर द फिक्स्ड कॉस्ट, greater will be the operating leverage and larger would be the magnifying effect of change in sales or the change in EBIT. Positive degree of operating leverage means that firm is operating at a level which is higher than the break-even sales level, and both EBIT and sales will vary in the same direction. तो अभी मैंने आपको बताया कि दो वेरिएबल है, एक आपका सेल्स है, दूसरा EBIT है, दोनों का डायरेक्शन सेम है, बोथ आर मूविंग इन द सेम डायरेक्शन। या तो दोनों बढ़ रहे हैं या दोनों डिक्रीज हो रहे हैं, अपोजिट डायरेक्शन नहीं है, दोनों का सेम डायरेक्शन है। वेदर बोथ आर मूविंग इन द अपवर्ड एंड बोथ आर मूविंग डाउनवर्ड, तो इट विल बी अ रिजल्ट ऑफ फेवरेबल ऑपरेटिंग लिवरेज। इट विल बी अ रिजल्ट ऑफ पॉजिटिव डिग्री ऑफ ऑपरेटिंग लिवरेज। इफ one is increasing upward, second is decreasing downward, first वाला decrease है, second वाला upward है, मतलब दोनों opposite direction में मूव कर रहे हैं, तो results will be negative degree of operating leverage and firm is operating at a sales level which is below the break even sales level. Interpretations of financial leverage. It is a percentage change in EPS as a result of a given percentage change in EBIT. This arises because of fixed financial cost in the cost structure of a firm. And fixed financial cost होगा या तो आपको ब्याज देना पड़ेगा या प्रेफरेंस डिविडेंड जो कि कांस्टेंट रेट से एक फर्म पे करती है। तो प्रेफरेंस डिविडेंड भी एक फिक्स्ड अमाउंट होता है इंटरेस्ट की तरह, जैसे इंटरेस्ट एक आपका फिक्स्ड फाइनेंसिंग कॉस्ट है, प्रेफरेंस डिविडेंड इज आल्सो ए फिक्स्ड फाइनेंशियल कॉस्ट। इफ देयर इज नो फिक्स्ड फाइनेंशियल लायबिलिटी, कंपनी ने डेट फंड्स यूज नहीं किया, तो फाइनेंशियल लिवरेज विल बी इक्वल टू 1 and 1% change in EPS will be same as percentage change in EBIT. जितना फाइनेंशियल कॉस्ट ज्यादा होगा फाइनेंशियल लिवरेज का वैल्यू ज्यादा, बट इट मींस देयर विल बी ए मोर परसेंटेज चेंज इन EPS will arise in relation to a given percentage change in EBIT. And positive firm is operating at a level which is above the financial break-even level. तो ध्यान रखना, this is the financial break-even level. And both EBIT and EPS will vary in the same direction. And negative DFN arises, firm is operating at a level lower than the financial break-even level, and EPS will be CL is a percentage change in EPS as a result of 1% change in sales level. Positive CL leverage is being computed for a sales level higher than the break-even sales level, and both EPS and sales will vary in the same direction. या तो दोनों अपवर्ड हैं या दोनों पॉजिटिव कोरिलेशन। Negative CL leverage is being calculated at for a sales level which is lower than the financial break-even sales level, and EPS will be right. Next, this is the EBIT EPS analysis. So there are 2 points with respect to the EBIT EPS analysis. So EBIT EPS analysis, what is the formula of financial leverage? डिग्री ऑफ फाइनेंशियल लिवरेज कैसे कैलकुलेट करते हैं? EBIT अपॉन EBT. One formula is this, EBIT upon EBT. Second is percentage change in EPS divided by percentage change in EBIT. So in one sense, it discuss about the financial leverage of a firm. So it involves comparison of alternative methods of financing alternative methods of financing at various levels of EBIT. So suppose there are three alternatives with respect to capital structure of a firm. दूसरे शब्दों में आप ये कह सकते हैं कि एक फर्म के पास तीन फाइनेंशियल प्लान है, फाइनेंशियल प्लान 1, फाइनेंशियल प्लान 2 एंड फाइनेंशियल प्लान 3. एंड व्हाट इज द EBIT? EBIT position at each level. Suppose EBIT is 10,000 in each case. It is a case of constant EBIT. It is a case of constant EBIT across three financial plans. So when EBIT level is same and there are three financial plans, this is first financial plan is 100% equity plan. There is no debt funds are used. Second is 50% equity and 50% debt funds are used. And third plan is 50% equity, 30% debt and 20% preference share capital. तो फर्स्ट प्लान में कोई भी लोन टू कैपिटल यूज नहीं किया, सेकंड में 50% डेट फंड्स यूज कर लिया, डेट इक्विटी मिक्स. तीसरा कैपिटल स्ट्रक्चर है जिसमें 30% डेट फंड्स यूज किया है और 70% जो है वो शेयर होल्डर फंड्स हैं. 50% इक्विटी शेयर होल्डर और 20% प्रेफरेंस शेयर होल्डर्स. सो देयर आर थ्री फाइनेंशियल प्लान. तो व्हाट इट मींस, we will compare first financial plan with second and vice versa, second with first, second to third, third to second. So this is the alternative method for financing at various levels of EBIT. The level of EBIT may be constant and level of EBIT may vary. अगर यहाँ पर आपका पहले में 10,000 है, यहाँ पर आपका EBIT लेवल 20,000 है और यहाँ पर आपका EBIT लेवल 18,000 है, तो EBIT लेवल चेंज कर दिया, राइट? What will be the value of EPS in various financial plans? So EBIT EPS analysis is an analysis of EPS in relations to the EBIT, and EBIT level may be constant or EBIT level may vary under different financing plans. So if we are considering various financial plans and in each financial plan we are finding out the impact of EBIT on EPS. So this study is known as EBIT EPS analysis. The choice of the combination of the various sources would be one which, given the level of EBIT and tax, would ensure the largest EPS. Suppose in this financial plan EPS is suppose 12 rupees. In this financial plan EPS is rupees 18 rupees, and in the third financial plan EPS is rupees 16. तो हमारा एक फर्म जो है सेकेंड फाइनेंशियल प्लान को चूज करेगी, क्योंकि सेकेंड फाइनेंशियल प्लान में क्या है, 50% डेट फंड्स है और 50% इक्विटी. सो दिस इज द चॉइस ऑफ कॉम्बिनेशन ऑफ द वेरियस सोर्सेज. सिर्फ दो ही सोर्स लिए, इक्विटी एंड डेट, क्योंकि इस फाइनेंशियल प्लान में फर्म का जो EBIT और EBT और अर्निंग आफ्टर टैक्स, क्योंकि अर्निंग आफ्टर टैक्स को नंबर ऑफ इक्विटी शेयर से डिवाइड करेंगे तो EPS निकलेगा, राइट? तो यही एक ऐसा फाइनेंशियल प्लान है या कैपिटल स्ट्रक्चर है जो मैक्सिमम EPS को प्रोड्यूस करता है, ठीक है? तो वो हमारा बेस्ट कॉम्बिनेशन ऑफ फाइनेंशियल सोर्स होगा. दैट विल बी द बेस्ट फाइनेंशियल प्लान द कंपनी विल चूज, बिकॉज़ दैट फाइनेंशियल प्लान इज प्रोड्यूसिंग द हाईएस्ट अमाउंट ऑफ EPS. So after this meaning of EBIT EPS analysis, क्या इसके अंदर हम कवर करते हैं? So there may be two types of EBIT level, constant or varying. So 10,000 in each financial plan EBIT, this is a constant, and 10,000, 20,000, 18,000, this is a varying EBIT. So when constant EBIT है, तो when what type of financing mix या what type of capital structure a company is using, and in the second, when there is a differing level of EBIT, what financing pattern or capital structure a company is using. And third point इसको हम पढ़ेंगे why financial leverage is called twin edged sword, दो धारी तलवार इसको क्यों बोलते हैं, राइट. थर्ड है नेक्स्ट फाइनेंशियल ब्रेक इवन एनालिसिस क्या होता है और इंडिफरेंस पॉइंट ऑफ लेवल क्या होता है. सी फर्स्ट ऑफ ऑल financial break even analysis. Financial break even analysis, it is the that level of EBIT which is just equal to firm's fixed financial cost. EBIT अगर 10,000 है तो 10,000 level of EBIT is just covering interest cost and preference dividend, and EPS is 0. EPS क्या निकलेगा? 0. So this is the financial break-even analysis. EBIT less than this level will result in negative EPS. And if the firm has used debts only, preference share capital use नहीं किया, तो financial break-even EBIT is equal to the interest charge. See the example. See the example, financial break-even analysis. In this equation, EBIT is just equal to interest charge plus preference dividend, and preference dividend को किससे डिवाइड किया हुआ है? 1 minus tax rate. इसका मतलब क्या होता है? 1 minus tax rate से क्यों डिवाइड किया? Because there is a corporate dividend tax rate is given in the question. Preference dividend के ऊपर company will pay corporate dividend tax. तो कंपनी का जो लायबिलिटी है वो दो तरह का है. एक तो डिविडेंड देना पड़ेगा प्रेफरेंस शेयर होल्डर्स को, दूसरा उसके ऊपर जो टैक्स रेट होगा दैट विल बी चार्ज्ड बाय द फर्म एंड विल गिवन टू द गवर्नमेंट, राइट. देखिए फर्म का इंटरेस्ट लायबिलिटी कितना है? 20,000. प्रेफरेंस डिविडेंड का अमाउंट कितना है? 36. टैक्स रेट 30. Corporate dividend tax rate is 20%. Find out the financial break-even level and verify the results. So the financial break-even level for the firm will be equal to interest charge, this is 20,000, plus preference dividend 36, plus corporate dividend tax 36 के 20% आपको कॉर्पोरेट डिविडेंड टैक्स देना है. तो कंपनी जो है 36,000 जो अमाउंट है वो प्रेफरेंस डिविडेंड का देगी और उसके ऊपर उसका जो टैक्स लायबिलिटी जो होता है कॉर्पोरेट डिविडेंड टैक्स वो भी पे करना होगा. तो टोटल कितना हो गया ये? 43,200, एंड दिस इज डिवाइड बाय 1 minus tax rate which is 30%. तो आपको 81,714 EBIT लेवल चाहिए. कि एक फर्म का फाइनेंशियल ब्रेक इवन लेवल is that level of EBIT which is sufficient to cover fixed financial cost and preference dividend and other liability of a business firm, right? वेरीफाई कीजिए EBIT लेवल कितना है? दिस 81,714, जिसमें से कंपनी पे करेगी 20,000 रुपए इंटरेस्ट के, तो रिमेनिंग प्रॉफिट कितना बच गया? 61,714, और इसके ऊपर आपको टैक्स लगाना है 30%. सो द प्रॉफिट आफ्टर टैक्स वुड बी 43,200, which is just sufficient to pay preference dividend 36 plus 7,200 corporate dividend tax on preference dividend, and no profit will be available for the equity shareholders, and EPS will be 0. So financial break-even level may be defined as that level of PBIT at which EPS would be 0. This way EPS 0. So this is the financial break-even analysis, right? Why financial leverage is called twin-edged sword? Twin-edged sword इसको क्यों बोलते हैं? So when a company has raised funds from the debenture holders or in the form of debt capital, the firm has considered interest liability, which is fixed, which is known as fixed financial cost, right? So, and if cost of that capital is 10% after tax, the company will determine what is the ROI. If ROI is more than 10%, so there is a comparison between ROI and cost of debt funds. If ROI is more than cost of debt funds, what it means, this is a case of favorable financial leverage. If cost of debt funds is just equal to the ROI of the firm, there is a case of no positive or negative financial leverage, neutral. And if ROI is less than cost of debt funds, so it is a case of unfavorable financial leverage, right? So what it means, when there is a 10% increase in EBIT results into more than 10% increase in EPS, so it is a case of favorable financial leverage. In this case, ROI is more than cost of a debt. If case is reverse, कैसे? If 10% increase in EBIT results into less than 10% increase in EPS, and 8% increase in EPS, it is a negative financial leverage. तो results क्या होगा? EPS will be less than, EPS will be negative हो जाए. तो इसका मतलब क्या है कि जो फाइनेंशियल जो लिवरेज है वो दोनों डायरेक्शंस में काम करता है. कि ईबीआईटी का जो इम्पैक्ट है ईपीएस के ऊपर, वो मैग्नीफाइंग जो इफेक्ट है, मैग्नीफाइंग इफेक्ट ऑफ percentage increase in EBIT on percentage increase in EPS will be in a very greater amount when ROI of the firm is more than cost of a debt. If cost of debt is more than ROI of the firm, या ROI return on investment is less than cost of debt, so in this scenario, if 10% increase in EBIT results only 8% increase in EPS, so it will be a negative financial leverage. तो दोनों ही डायरेक्शन में ये काम करता है. So that's why financial leverage will have a favorable impact on EPS and return on equity only when firm ROI exceeds the cost of debt. This is scenario. If ROI is 15% and cost of debt is 10%. So it will be a case of favorable financial leverage. Impact will be unfavorable if ROI is less than this. If ROI is 9%, which is less than the 10%. So it will be a case of unfavorable financial leverage. And if it is a case of both are equal, ROI is equal to cost of debt, it will be no financial leverage is said to be a double-edged sword, right? कि यहाँ पर there will be no change in the EPS of the firm, right? So this is financial leverage is called twin-edged sword. ठीक है, अगर पॉजिटिव डायरेक्शन लेता है ये फाइनेंशियल लिवरेज गेट से या टेक से पॉजिटिव डायरेक्शन, तो इक्विटी शेयर होल्डर्स को बहुत ज्यादा फायदा होता है. अगर फाइनेंशियल लिवरेज एक नेगेटिव डायरेक्शन ले लेता है तो इक्विटी शेयर होल्डर्स को ज्यादा नुकसान उठाना पड़ेगा. तो इसलिए दोनों ही डायरेक्शंस में काम करता है। Indifference point or level. The indifference level of EBIT is one at which EPS under two or more capital structures are the same. जैसे माइक्रो इकोनॉमिक्स में इंडिफरेंस करो एनालिसिस पढ़ते हैं, यूटिलिटी एनालिसिस में इंडिफरेंस करो एनालिसिस। व्हाट इट मीन्स, a consumer gets equal satisfaction from the consumption of two goods in which quantity of two goods will vary. अगर आपके पास दो गुड्स हैं, एप्पल एंड ऑरेंजेस, a certain quantity of apple and a certain quantity of orange will make a mix of two goods. What is the utility, what is the satisfaction obtained by a consumer from this mix of two goods? कितना उसको बेनिफिट मिल रहा है, सेटिस्फेक्शन मिल रहा है। एंड when there is a change in the quantity of two goods and another group is created, कि एक गुड्स की क्वांटिटी ज्यादा दूसरे की कम अगर आप कर देते हैं, बट आपके सेटिस्फेक्शन में कोई चेंज नहीं आता, तो इसका मतलब क्या है? दिस इज द इंडिफरेंस पॉइंट, कि कंज्यूमर लेवल ऑफ सेटिस्फेक्शन इज इक्वल, satisfaction level is equal at two or more points of two combination of two goods, okay, which we are producing the same level of satisfaction to the consumers, right? So in difference curve में generally it is convex to the origin, right? but satisfaction जो level है वो आपका same रहता है, ठीक है। बट राइट की ओर जो इंडिफरेंस करो होता है, जैसे ये इंडिफरेंस करो 1 है, ये 2 है, ये 3 है, एंड दिस इज 4। IC4 is giving more satisfaction to the IC3, but all points on an indifference curve produces equal satisfaction to the consumer. On the same way, the indifference point, it is that level of EBIT at which EPS under two or more capital structures are the same. If this is A financial plan, this is B, and this is the C, and the EPS is 10, EPS is 10 under 3 financial plan, so there is no change in EPS, although EBIT level varies. सपोज यहाँ पर आपका 1,50,000 है, यहाँ पर आपका 1,80,000 है, एंड यहाँ पर आपका 2 लाख है। Level of EBIT is varying, but EPS remains same. So this is known as indifference point or level. ठीक है? So the level of EBIT beyond which benefits of financial leverage begin to operate with respect to the earning per share. तो indifference point से above जो आपका EBIT लेवल होता है, उस EBIT लेवल के ऊपर आपका EPS लेवल चेंज होता है, राइट? तो एक आपको EBIT का इंडिफरेंस पॉइंट देखना है, और इंडिफरेंस पॉइंट से आगे और इंडिफरेंस पॉइंट से पीछे अगर आप EBIT लेवल कंसीडर करते हैं, तो यू विल फाइंड ए डिफरेंट वैल्यू ऑफ EPS. But in difference point or level of EBIT only produce constant amount of EPS. Finding indifference point or level. See, there are two approaches: algebraic approach and graphical approach. पहले हम algebraic approach देखते हैं. So this is the X stands for EBIT. N1 stands for number of equity shares outstanding only. Only equity shares are used. This is one financial plan, जिसके अंदर 100% जो पैसा है वो इक्विटी कैपिटल का लगा है. Second, number of equity shares outstanding if both preference and equity shares are used. This is the second. This is the first financial plan. Equity only. Second, debenture and equity. डेट इक्विटी हो गया. तीसरा है प्रेफरेंस एंड इक्विटी हो गया, एंड फोर्थ प्लान ऐसा है जिसमें इक्विटी के साथ आपका प्रेफरेंस शेयर्स और डिबेंचर्स है। तो आपके पास चार तरह के कैपिटल स्ट्रक्चर है, चार तरह के फाइनेंशियल प्लान है। I stands for amount of interest on debenture, DP stands for amount of dividend on the preference shares, and T stands for corporate income tax rate, and DT tax on preference dividend। तो ये नोटेशंस आपको आपने यूज की इन डिफरेंस पॉइंट को निकालने के लिए। एंड फॉर ए न्यू कंपनी इन डिफरेंस पॉइंट कैन बी डिटरमाइंड बाय यूजिंग द फॉलोइंग इक्वेशन। पहला फाइनेंशियल प्लान आपका क्या था? इक्विटी शेयर्स वर्सेस डिबेंचर। सो दिस इज द इक्विटी शेयर्स वर्सेस डिबेंचर्स। तो आपको निकालना है डिफरेंस पॉइंट। व्हाट इट मींस, दिस इज द वन फाइनेंशियल प्लान जिसमें सिर्फ आपने क्या यूज किया है? इक्विटी कैपिटल यूज किया है। एक्स स्टैंड्स फॉर ईबीआईटी, ईबीआईटी इनटू 1 माइनस टैक्स रेट, क्योंकि ईबीआईटी में से आपके पास कोई इंटरेस्ट माइनस नहीं हुआ क्योंकि आपने डेट फंड्स यूज नहीं किया। प्रेफरेंस डिविडेंड माइनस नहीं होगा क्योंकि प्रेफरेंस कैपिटल नहीं है। सिर्फ और सिर्फ आपके पास क्या है? इक्विटी। समझ में आ रहा है? हाँ जी। तो ईबीआईटी एट दिस पॉइंट एंड सेकंड दिस ईबीआईटी शुड बी इक्वल टू दैट लेवल ऑफ कैपिटल स्ट्रक्चर जिसमें इक्विटी और डेट फंड यूज किया गया है। ईबीआईटी माइनस इंटरेस्ट 1 माइनस टैक्स रेट डिवाइड बाय n।
तो पहले का कोई स्ट्रक्चर था n माइनस
ऑल इक्विटी था,
तो टैक्स रेट माइनस करना पड़ा। हमारे पास डेबिट था ही नहीं,
कॉर्पोरेट इसलिए कॉस्ट क्या नहीं था? टैक्स रेट तो गिवन होगी ना, वो तो माइनस करना पड़ेगा आपको। अर्निंग बिफोर टैक्स माइनस टैक्स इज अर्निंग आफ्टर टैक्स। तो इक्विटी शेयर होल्डर्स के लिए जो अर्निंग है वो आफ्टर टैक्स होती है ना, तो इसलिए दिस इज द अर्निंग आफ्टर टैक्स डिवाइड बाय नंबर ऑफ आउटस्टैंडिंग इक्विटी शेयर्स। यहां जो ईबीआईटी आएगा वो इस फाइनेंशियल प्लान के बराबर होना चाहिए। और ये फाइनेंशियल प्लान क्या है? इक्विटी और डेट। ठीक है। सपोज सेकंड में हमारे पास इक्विटी और प्रेफरेंस शेयर्स का कॉम्बिनेशन। तो दिस इज द फर्स्ट एंड दिस इज DP। दिस इज द इक्विटी, EBIT 1 minus tax rate minus preference dividend। This is the second। थर्ड में equity shares versus preference shares। This is the equity only, this is the equity and this is the preference, equity and preference share capital। Equity shares versus preference shares and debenture। Equity only, debentures, preference share capital and equity। This is the combination। तो maximum for a new company अगर आपको EBIT या इंडिफरेंस पॉइंट निकालना है या इंडिफरेंस लेवल, तो यू हैव कंसीडर्ड टू फाइनेंशियल प्लान। तो ओनली इक्विटी प्लान एंड सेकंड इक्विटी प्रेफरेंस एंड डेट प्लान। तो व्हाट इज द EBIT लेवल on 100% equity? What is the EBIT level on equity, preference and debt? अगर दोनों ही केसेस में EBIT इक्वल है तो it will be a case of indifferent points, right? For an existing company के लिए debentures are already outstanding। तो debentures are already outstanding। तो this notation, interest paid on existing debt and interest payable on additional debt, so indifference point will be determined by this equation। This is a combination of equity and debt, existing debt। This is a combination of equity, existing debt और new debt। ये additional जो पैसा दिया है वो भी आपने debt fund से दिया है, right? So this is the 4 or 5 cases to determine the indifference point or indifference level indifference level of EBIT at two or more financial plans. Right? See the example last. This is the question on the basis of indifference points. So this is various financial plan to finance 30 lakh amount required to implement various capital busting projects. Either equity capital of 30 lakh, pure equity plan, 15 lakh 10% debenture and 15 lakh equity. First plan okay. Second, equity capital 13% preference of 10 lakh and 20 lakh from the equity. Third one, 30 lakh from equity only, 10 lakh from preference subject to the dividend tax of 10% and 10 lakh from debenture and 10 lakh from equity. तीनों हो गए ना. एंड फोर्थ में 20 लाख रुपए आपका इक्विटी से है, 10 लाख रुपए डिबेंचर से है. दिस इज द एग्जिस्टिंग केस एंड 13% कैपिटल ऑफ 10 लाख, 8 लाख एंड 12 लाख. राइट? So you are required to calculate indifference point for each financial plan, assuming 35% corporate tax rate and face value of equity share of rupees 100. Right? तो इसलिए पहला प्लान देखिए ध्यान से. See, first plan. This is the equity only. X stands for EBIT. EBIT into 1 minus tax rate. Number of existing equity shareholders. 30 lakh अमाउंट था और एक इक्विटी शेयर का वैल्यू कितना है 100 रुपीज. 100 रुपीज ना. तो टोटल नंबर ऑफ इक्विटी शेयर्स कितना आ गया 30,000. एंड दिस इज द इक्विटी माइनस डेट प्लान. तो EBIT माइनस इंटरेस्ट राइट 10% था ना. 15 लाख रुपए किससे लिए डेट से. और 1,50,000 रुपए ब्याज हो गया 1 माइनस टैक्स रेट. तो 15 लाख रुपए का क्या बचा आपका इक्विटी शेयर कैपिटल और नंबर ऑफ इक्विटी शेयर्स 15,000. तो यू हैव कंप्यूटेड EBIT ऑफ 3 लाख. EBIT कितना होगा 3 लाख इन बोथ द फाइनेंशियल प्लान. सी कंफर्मेशन कीजिए. EBIT इज 3 lakh in equity and 3 lakh equity plus debt financing. माइनस इंटरेस्ट 0 क्योंकि ये इक्विटी प्लान है प्योरली. यहाँ पर आपने इंटरेस्ट माइनस कर दिया. सो दिस इज अर्निंग बिफोर टैक्स. दिस इज द टैक्स आपने माइनस कर दिया 1,05,000 और 52,500 एंड EPS कितना निकलता है 6.5 and 6.5. The EPS is same. So this is the different level of EBIT under two financial plan which results into same EPS. So this is the indifference point या indifference level of EBIT under which EPS is same in two financial plans. Clear? तो ये आपका indifference point and last और देखिए सर आपको क्या पढ़ना है constant level of EBIT. See this point. See in this example EBIT there are 4 financial plan option 1 से लेके option 4 तक. In this it is pure equity plan and in this pure equity plan EBIT is same 1,50,000. EPS का वैल्यू क्या निकल रहा है 21 और हाईएस्ट अमाउंट किसमें है 58, राइट? And in this option 4, what is the amount of interest? 25,000. Which is the highest? 25,000 is the highest interest cost in the capital structure 4, in the financial plan 4. What it means? A given percentage change in EBIT results into a more percentage increase in the EPS of the firm. The financial leverage produces highest EPS in this capital structure. So this is the 58. So what it means this case is when there is a constant level of EBIT and there are the various financial plan. So the financial plan in which a firm has used highest amount of debt funds, that financial plan will result into highest amount of EPS. This is 58, right? Now last. There is a total asset of 3 firms, normal, conditions, poor and good. ROI is 5%, 8%, 11%, and EBIT is different. EBIT is different. So, in case number 1, X and company, there is a no financial leverage. When no financial leverage is used, what it means 100% equity funds are used. But EBIT level is different in 3 scenarios: normal scenario, worst scenario and very best scenario. तो उसमें हमारे पास EPS क्या निकलता है? EPS is different when there is no financial leverage. So this is the value of EPS. When 50% leverage is used, what is the value of EPS? 2.87 and 11.2. When 75% leverage is used, so it is 18.20. Right? See what I am writing to you. In the best scenario, EPS is highest when 75% leverage is used. When 50% leverage is used, EPS is 11.2 in the best scenario. Consider only one scenario. Suppose we are considering only the best scenario. In the best scenario में EPS निकल रहा है 11.13 when 50% leverage is used. When 70% leverage is used, it is 18.20. Or when no leverage is used, 7.70. So what it means? There is a beneficial use of financial leverage to increase the EPS of a firm. Condition is that ROI of the firm is more than cost of debt. The percentage change in EBIT will create a magnifying impact on EPS only when ROI of the firm is more than cost of the debt. तो ये आपका EBIT EPS एनालिसिस था in the leverage analysis, right? तो chapter is over about leverage analysis. ठीक है, तो you must learn about operating leverage, financial leverage, combined leverage, numerical questions, and how to calculate EPS when there is a constant level of EBIT, how to calculate EPS when is a varying level of EBIT, and how to find out indifference points or indifference level of EBIT, right? So thank you. अच्छा ये बताइए आपके कैपिटल